Hey, good morning, Albert.
Hey,
10
good
o'clock on the
morning.
West
Good
Coast.
morning, Mr. Grider. How are you, sir?
Man, I'm telling you, this year is flying by. I look at it, and as I get older, I know it's tough. I say older, and I'm 40, right? Even though I've been in the business 40 years. I don't know how that worked out.
Started when
But
you were
man,
one.
every month, it just seems like it's just flying by. I mean, I remember, 10 years ago, starting with this company, just starting out in the non-QM to where we're at today. And it seems like some of the COVID things that happened, and you go through all the rapid rate increases, and then here we are today. And it's still kind of volatile out there, right? But it's amazing how time flies, and just trying to help as many borrowers as we can and help our partners close more loans.
Absolutely, absolutely. I mean, the market has been doing some favorable things as of late, so I
Looking
mean
for,
that
looking
that
for a
helps out.
new tweet or something from True Social about tariffs, right? Okay,
Hey,
what you wake up every morning, you don't know what's out there. What? Okay,
what's the flavor of the day?
yeah. Well,
So
we're going to increase
exciting.
the
Keeps you
tariffs.
excited. Keeps you on your toes.
It does.
It does. So yeah, we're not lacking information or entertainment. I now look at it as entertainment.
There you go. That's
Makes life
definitely a way to
fun.
look at it. All right. Well, with that, we want to thank you everyone for attending another webinar here with Home Express. Today, we're going to be covering using assets to qualify in non-QM not only as income but also as reserves. So, really, really good material that we want to share with you. As always, we want to thank you for your participation. And today we have with us, as always, Mr. David Grider, who is our Senior Vice President of Sales, myself, Albert Martinez, who's a corporate trainer here at Home Express, and our special guest today is Mr. Greg Fairman, who's our Vice President of Sales in the Western Division. So with that, Mr. Grider, I hand it off to you, sir.
Man, first I'd like to say is thank you guys for joining again. I think this is a little bit shorter on content than we normally do, but I thought it was important, right? So that we kind of go through assets and kind of look at what differences and what you can do in the non-QM space that might be different from conforming that most people are used to, and help you close more loans, right? So we'll go ahead and look at the agenda today, and then we're going to get, the good news, we got a few examples for you that are really, really recent, right? So we're going to go through assets. What do we mean by that? And it's probably obvious, right? And then we'll look at all the different ways that ability to repay is done. And under Dodd-Frank, there's rules of the loans that we need to do. One is, assets, one is income, that's a DTI, and another one's a combination. We're going to try to look at that and how Home Express guidelines kind of fit on that and our flexibility of that. And then we're going to go into the reserve section, some of the differences you might see on consumer purpose loans, business purpose loans, and some caveats on that to kind of help you navigate through this. And then I'll go through some of the new programs we put out in the last 12 months. But with that, Albert, I'm hoping you got a poll, right? I just love the polls that you put out. Do we
Mr.
have one
Grider,
today?
I do,
Yes.
sir. I do. So here we go. So we want to go ahead and ask the masses, what is the percentage of non-QM loans that uses assets to qualify? What say you? Is it going to be less than 20% or is it more than 20%? And
Hmm.
we're getting some votes. We're getting some
We're
votes.
getting votes.
Yeah, we're getting some votes. Here we go.
I'm ineligible to vote. It says right on my screen. I'm going. I don't know. It's a good question though. How many kind of utilize this, and how many loans, if even if it's not starting out that way, go that way, right? That's the other thing too. As we go through this, you'll find out.
Absolutely, sir. So it looks like the masses have voted, and it's less than 20%.
I think they are absolutely correct, right? And I think there's a couple reasons for that. One is most look at the income side and do that. It's just traditionally do that. I also see, the initial loans that come in. I randomly look at a few of them, that kind of stuff. It's like they're not put on the application. And so hopefully this comes through is that maybe that might be a good idea to kind of find that information out and on here. It might save the deal when I start going through this presentation with you. And like always, put questions in the chat. It doesn't have to be necessarily just on this topic. I love that. It could be on any guideline or program or industry related questions you may have, and I can answer those at the end. So let's go into what do we mean by assets, right? So it should be Captain Obvious, but I think we kind of look at what it is. Maybe it's something you haven't thought of, right? So the assets that we use for ability to repay and reserves are cash and cash equivalents. There's some of that listed there. Stocks and bonds, brokerage accounts, mutual funds, great. Those work too, and retirement accounts, right? So those are the things that we're looking at today to see how we can put it into ability to repay and reserves. On the next slide, we're going to talk about kind of the first one that I wanted to cover, and this is bill to repay in full. So it's really assets in full. So this one is done with the concept of they have enough money to pay us off plus extra, right? So it's 125% of the total loan amount, and you qualify. It is not a DTI loan. It's really just assets that they have, and you're done. It really works well. I say probably this is one of the more popular ones that we see coming in because a lot of people are asset heavy. We make it easy. You don't have to go look at the business bank statements or W-2 tax returns or anything. Here's the assets. And they qualify. We do require 6 months seasoning, so we've got to make sure that they own the assets. It's just not theirs, and then they do the loan, and it goes to someone else. That could happen, right? Kind of look at the assets we're using. All owners of the assets, but there's control on those. Must be our borrowers. And then we take, and here's the calculations for you, 100% of cash and cash equivalents, 90% of stocks, bonds, brokerage accounts kind of category, and then 70% of retirement accounts underneath the age of 59 and a half. If they're over that, then it can turn into a stock bond brokerage account calculation. And these are consumer purpose loans, talking on that. Minimum FICO 640. Again, I talked about not income detailing, but the LTVs can go to 85, even though I'd say most of we get in put 30% down. I was looking at why do we want to put 30%? The 70% LTV seems to be a sweet spot on the best rates, right? Typically, these borrowers have great credit, right? Because they got assets so they're looking at some of the best rates possible on these, and so they usually put 30% down. And I say, since you're not looking at the income side, very limited conditions, and they close fast. So let's look at a couple examples for you, and these are all recent that probably in the last couple weeks. So, Mr. Fairman, would you like to take kind of go over some of the examples you kind of put together here for this? And can't hear you, Greg. All right. Okay, I'll kind of go over this. This is one from his team on the West Division, right? And this was a purchase price of 1,450,000, right? And when we look across, again, you can't see it, but everybody down here is going to cover that. But they had buyer calculations 1,250,000. Let's say it's in there, and they put 30% down. That's after the total loan amount. We did a 980,000 loan amount. And this actually just took 2 weeks to close. And this is a TRID loan purchase, right? You can see where these just go fast, great rate, that kind of stuff that happens. So excellent. We'll go to the next example, which I liked as well, because I say typically they're done on purchases, but you can also do them on refinances, right? So this one is a refinance, 65% LTV, right? It's just approved, and they had 1,500,000 buyer calculation of the two accounts that come through that they provided to us. Another great rate at 65. And then the question I always get, well, they have all this money in brokerage accounts, retirement accounts, all of it. Why are they getting a loan? Because they do have the ability to have no debts, right? No mortgage, but why do they do that? I'd say the most typical one is they don't want to pay their capital gains, and they might have assets that are there that they don't want to touch, and it might be, hey, I want to have this going in the future, believing that return will go higher. So just to give them, they don't want any tax consequences, and they want to keep those assets in those accounts moving forward. And again, just an example for you of one that's just approved. We'll go to the next slide. And man, this is now changing the assets portion into a DTI loan, right? So So one is asset in full. Now we're going assets for the income side of figuring it out, right? So this is just taking the assets, the same calculation that is done, and then dividing by 60 months, and you can add that as additional income to the application. Again, the same rules apply, 6 month seasoning, right? The good news is can be applied to all income types. That's bank statements, right? Tax returns, W-2, all of them they can apply, right? The same calculations. And then the consumer purpose on the assets used for DTI, minimum FICO 600, and we do have LTVs to 90. All right, Mr. Firma, are you back with us?
Sure hope so.
Yeah, well, a little bit, a little breaking
There you
up.
go.
There you go. Let's go to a couple examples here, Mr. Fairman, that you kind of put together for us.
Appreciate sorry for the technical error.
Yeah.
So Asset Assist, this is one, out of the two programs, I like this one the most because it really lets you be a bit creative in regards to helping to qualify. You're able to turn more loans from no's to yeses. In this particular example, we had $1.4 million purchase, 80 LTV, and without the Asset Assist, you were at a debt ratio above 50%. So in this particular case, you had four different 401k accounts, a couple of brokerage accounts, and a mutual fund. So the borrower had, quite a bit of assets, had some different accounts. We were able to cobble together. We applied our factors to it. And in this particular case, again, we almost came up with $11,000 of additional income. It was $1.1 million of qualified assets, less the cash to close, came up with an additional $11,000. And then you turned a no into a yes, and we're able to get the purchase closed. It went from a debt ratio above 50% down to 45%, which is huge, right? Again, it's really a value-added product that helped the borrower get the transaction finished.
Awesome. And again, they utilized a lot of accounts, right? That's what they looked at, and it surprised you. I guess I'm over the age of 40. We'll just say that. But if you go back into the 60s, 70s, most people stayed at one company for a long time, and that transition's done. So a lot of them have 2 or 3 different retirement accounts, different assets, brokerage accounts. And so you can use all those and we can figure those out, plus the checking, savings, CDs, and all that. Let's go to the next example. And I'm glad you got another one here of a refinance, right? So purchase and refinance on the consumer purpose side works.
So refinance, $430,000, really low LTV, 43, but we were stuck with a debt ratio above 60%. So unfortunately, without the product, we wouldn't be able to get the transaction closed. But the loan officer took a very thorough application, discovered that the borrower had a CD with $103,000 in it. We were able to divide it by 60, come up with another $1,700 in income. That took a loan that I don't know what I'm going to do with, and unfortunately didn't qualify at a low LTV to a debt ratio under 50%. We were able to get the transaction completed. So again, this is where you really become a value-added loan officer by having access to these different products, and we're able to get something closed.
Dude, that's awesome. Great job. Okay, so now we're going to go to assets used for reserves, and I broke out 2 categories. They're different on consumer purpose and business purpose, right? So on consumer purpose, 60 days seasoning on the reserves. And again, you got to make sure they have control of the assets and that kind of stuff. To say all owners on the accounts must be our borrowers, right? Business, and then there's cases that you can get different letters for that. And I get that. I'm just putting that out there. Business accounts qualify for reserves, right? And I think we had a question in the chat. Can I use business accounts for asset assist or use it as income on a loan? The answer to that is no, right? But because that's used as income, and there's no way to tell whether those funds are really setting aside for the business or not. So business bank statements, what you're using as far as income, you can use it for reserves as well. But the money they have in their business account would have to be in their personal account to be used for an asset program. Do that. Now the business accounts that qualify for reserves need at least 50% ownership, right? For that. So it's under that, then not so much on the reserves. Again, same calculation. Now, the one thing here is that I didn't really talk a little bit about is there's one asset out there everybody sees. We see it on the news every day is crypto. And there's cases for that. So if that's something you're looking for, other than crypto, I'm not looking at the funds to close because it's volatile, probably have to be transferred into a US bank account. But we can look at certain things on that borrower. What you need to do is just talk to one of our account executives. They're highly trained, kind of do that, and we can get that up to our credit desk if it's something unusual. And again, we are a true lender. We underwrite our own guidelines, fund our own money, and we're able to make exceptions. And this comes up to my other thing is like most compensating factors you have for making exceptions of LTV or those type of things. Man, if you have assets, I mean that is a good compensating factor on exceptions. So if you could get in the habit of looking at, when you're taking an application or trying to say, hey, getting that data on that. Don't necessarily need that documentation right now, but on the application would help out a lot as that loan goes through. We'll go to the next slide, and that's assets used for reserves on business purpose, right? Now, these are non-TRID loans, so we kind of scale these down to really make it easy, right? So on reserves, it's only 30-day seasoning that you need, right? And that's for only LTVs greater than 65. And the good news is only 3 months are required after that, right? But it goes through the same thing on the calculation, which I really don't need to go into. But I think I'd talk a little bit about what these assets, and I'm going to talk a little bit about funds to close, even though this is a little bit different. If you ask most funders in our industry, right, they'd say this is the one, man, I wish I knew exactly what account they're using for their funds to close. We got the reserves, there's the funds to close, magically go there. And if you could iron that out and say, hey, this is the account I'm going to use, here it is, and there, it would help immensely. Not to say we don't do it, it's just that the funder may not have authority to review those funds. It has to go back to the underwriter, and the underwriters go back to the funder. It just make it easier for you. And I've bought a house, probably the last 5 years, we'll say that. One of the questions that most real estate, you got the funds to close. You have proof of that. It helps solidify the purchase. Yes, I do. Here it is. This is the funds I'm going to use to close. But when the deal is, and everybody's different, but just tell us if it's going to change earlier, that kind of stuff. Even if the loan's not with us, that will help you with that borrower, real estate agent, say, close more deals on time with less hassles. I just put it that way. All right, Albert, and then we'll go. Maybe there's another poll question for us, Albert. What do you think?
That's what I was about to say, Mr. Greider. Before we move on, I know how you love those polls, and
I don't know. I have no idea what you got for me today.
Oh,
what do you
well,
have?
sir, I have a fun one. Being that the NFL season is looming, it's almost around the corner. We can't wait, and you know how much we love the NFL around here. I actually did some research, and I went and looked up what Vegas thought who were the best teams that were coming up and who's most likely to win the Super Bowl. So let's go ahead and let's ask the masses and see what they think. According to Vegas, which team has the best odds to win the Super Bowl? Is it the Eagles, the Chiefs, the Ravens, the Bills, the Lions, or of course, your Las Vegas Raiders, sir?
Oh, my goodness.
Here we go. What say you, Mr. Greider? I think the sleeper team this season is the Lions, personally.
Well, they're probably a sleeper. There's always one or two that get out here, but man, I like the Ravens. I think the Ravens got a pretty darn good team, and but all of them are good. So I'm going to go with the Ravens. I'm not going to take the Vegas Raiders. It's not going to. Even though I think the Raiders are going to be better this year, right? I do, but I mean that's tough to get into that upper echelon. I look at those teams that are pretty. They got pretty well-rounded teams there. Any of those teams could win it, I think. But I'm just going to say Baltimore Ravens. So these are the odds favorites, right? So if you're putting $100 down, these are the ones you don't get a bigger return. But if you put $100 on the Raiders, I bet you that's like 5,000 to 1 odds.
30 to 1. Oh no, 100 to 1. 100 to 1. And actually, I saw this yesterday because it popped in that someone put in on they put in a bet of $25,000 on the Raiders, which will pay them, I think it's 25 million if it hits, right? Because it's 100-1, right? So
Albert, you give me the $100 and I'll go ahead and hang on to it for you. And we'll see how it
Yeah,
works out.
yeah.
Give me that
there we
$100.
go.
I'll take care of you.
So the masses say the Chiefs. They think well, it's really close between the Chiefs and the Eagles, right? And look, we did get some votes for the Raiders. Go Raiders.
They must live in Las Vegas or former Oakland fans, right?
You know who's
And
not
I
up
live
there?
in
The
NorCal. I've
Commanders.
seen a lot of Raider games over in Oakland in my day, right? So, man, who knows? There's sleeper teams out there, right? So that's great. So,
Full service
all right.
seminar, teach about assets and football handicapping.
There we go.
A lot of things. All right, so I'm just putting some items to watch for on assets, right? And I thought I'd just talk a little bit about that, the names on the account, right? And believe it or not, I've seen that, come over, here's the assets, and they're in their kids' names. Our borrower's name's not even on it. And just for example, it could be their money. It probably is. They just put it on there in case something happens. I go, yeah, but they have to have legal control of it. Business ownership. They have a lot of money in business, but they only own 30% of the business, right? So it might be a little bit tricky on that. And then I always say retirement accounts are overlooked constantly, right? Put that on there. We can use 70% of that in most cases for reserves or into the asset assist thing for DTI. And then the next one is to get these brokerage accounts, and they do a lot of trading and leveraging, so they have pledged assets. So these are just ones to look out for because they're already being used. Those assets are already being used as leverage. And I talked a little bit about what we brought on for this year, but I've just talked a little bit briefly on this programs. Now, Home Express is primarily a non-QM company. It's not going to change what we do. We underwrite our own guidelines, non-QM. But since we do that, and we've done it very well, we've added in some other programs for our partners here. Great rates, I tell you, because we specialize in non-QM. We're just able to offer this. So if you looked at our pricing on Loan Sifter for FHA, VA, you'll see we're out there. Now, we're not here to take, if you got it in-house, keep it there. We're only looking at the ones that do it on wholesale level. So those are some things we have: Fannie Mae, Freddie Mac, FHA, VA, so full suite of products. The other two programs that came is some AUS programs, Prime Jumbo AUS coming out. Don't see a lot of them because if you looked at the pricing on non-QM that we have and Prime Jumbo, a lot of cases, the non-QM side might even be better price, right? So, but there's cases, especially when you get to 75, 80 LTV, this might be to your advantage, right? So we do follow primarily the AUS, except for appraisal waivers, got to have appraisals on this one. So, but we take this so you can just follow what the conditions are primarily, right? Just a few caveats to it. The other one we brought on is a non-owner occupied AUS, seen a few of those. And what we've seen, so in our space that we looked at is that some of the agencies have put on heavy LLPAs on non-owner occupied investment properties. Again, they're full doc. Well, it depends on the AUS findings. Could be 1 year full doc, but it is income related. Minimum loan amount's 200,000, and there's no appraisal waiver, but good pricing, those type of thing. It's a TRID loan. It's actually a QM loan, even though it kind of fits in the non-QM space and what it is. And then I'd like to talk to you a little bit. That's something that we launched beginning of this year, and well, this is where you can find us, right? So I like to go back. I almost forgot that. Everybody knows, how do you find our pricing? Well, we have the portal, contact one of our AEs, but we're also on Loan Sifter and Lender Price right now. I'm working on other pricing engines. So you can go right there if you're not, we're not on the list because you actually got to, put us on that you want to see our pricing, talk to your admin person to say, hey, I want to select Home Express to see if they're at. Same with Lender Price, you can do that. Or you can also call one of our account executives and they'll be able to help you out with that. But the program we started out this year is we've had a lot over the last 3 years ask, hey, you do a great job. We send all these business to you on the wholesale side, but we prefer to keep deals in-house and be the lender. So we came up with non-Dell correspondent channel beginning of this year, right? And it's just for non-QM, right? You do have to be approved separately for it, but what we did is wanted to take everything we did great on wholesale that our partners have that liked about us, put it into this space, right? So there's no carve outs on programs. You have, a scenario desk plus your same AE. It's just that at the end of the day, you're funding the loan, your company's funding a loan, and we're purchasing it. And so you get a little more flexibility on pricing and the way it's done since you're the lender. But we're going to make it very easy for you guys with limited risk. On the next slide, we kind of go through the steps. But ultimately, if you're interested in that, you're going to have my contact at the end. Please reach out to me if you're interested in becoming a non-Dell correspondent partner, client with us. And I think you'll really enjoy that. You have a dedicated team that works with you. So with that, Albert, I know we got probably some questions that come up. I'd love to see if I can tackle those.
Yeah, we do, Mr. Kreider. So we did get a couple of requests for a copy of the deck. So just always please note that we do make a copy of the PowerPoint available to you via email after the meeting is over. We'll send you a copy of this. You can always watch it also on our website. If you go to homeexpressmortgage.com, we post all of our previous webinars as well as the current webinar, so you can always watch it. And like I just mentioned, we will send you a copy of the deck. One of the questions that we got in the chat says, can they use business funds?
So business funds it can be used for funds to close and reserves if they have the appropriate ownership. Not allowed for asset in full or asset assist in the depreciation. That's where it's not. So that hopefully I clarified. But the business account can be used for income and reserves and funds to close.
Awesome. The next question is from Melanie Hadley, and it says, can the asset assist be used with other forms of income also? For instance, if they have W-2 income, but DTI is too high, can the assets be used to lower the DTI?
Yes, all day long. This is that program, right? All income types count, right? Even your business bank statement or personal bank statements, right? W-2, tax returns, those type of things, all can be used, right? You got to be kind of careful if it's on the tax returns you see that, but grab the assets out there. But yeah, absolutely. We do those all day long. So yes, please let me know if there's a loan that we can help you out with.
Thank you, Mr. Kreider. We did get another question that says, for the Asset Express, what assets are sufficient to cover the loan amount?
The assets would be 125% of the loan amount, and that's after after down payment and closing costs. Needs to have that at 125%. It's approved. Now, the typical assets we get is cash equivalents, brokerage accounts, right, and retirement accounts, and to kind of do the calculation.
Excellent. And it does kind of follow with that one as far as, what are the reserve requirements for this program?
So it's really the 125% covers reserves. So that's already in the mix, right? So we already say they got 125%. That covers reserves going forward, right? And then the reserves really depend on, like on the consumer purpose, it could be 6 months reserves that you need if it's a higher LTV, right? Depends on the LTV that we're doing on the reserves. And then we talked about on the business purpose on reserves, over 65 LTV requires 3 months.
Awesome. Thank you for that. And, keeping up with the Asset Express, what is the minimum FICO score? Is there one that's required for this program?
Yeah, 640.
Awesome. Thank you for that. And as far as asset related questions, it looks like we got a couple right here. And can you please recap on what are some of the acceptable assets that may be used?
Yeah, maybe we can go back to a slide, Albert, to kind of go over that. I think it's like at the beginning, right? The really beginning had slide 5. There we go. Slide 5, right?
Yes, sir.
Right. These are the ones that typically use. We saw some examples that Greg put out there. One person had $125,000 CD, right? And okay, that worked, right? Cash value life insurance, checking, savings, those are at 100% because they're cash or cash equivalents, where you could just cash them in right now today, and you got a check really quick. Stocks and bonds, mutual funds, all those types of things, and brokerage accounts can be used as well. These take a little bit longer to get the funds, but you can go to any brokerage house and say, "Hey, I got this, and I want to cash in that." A week later, you have your money, and there's probably some type of tax consequences on the capital gains, so that's why that one's at 90. And then the retirement accounts, we use 70% on the retirement accounts. But these are the most typical ones we receive.
Awesome. Thank you for that, Mr. Greider. And one of the last questions that I am getting here, and it just has to do with would a credit line affect the assets available for a brokerage account?
Yeah, yes, because that's a leveraged, right? So it'd have to be netted down, all right, of what it is to take care of that because they're already borrowed on that. So it's not all in their control. That line would have to be canceled for us to use. And I've seen this quite a bit. That's why I go from those pledge assets and people borrowing or having a credit line. Probably a smart move, right? If I had a few $1 million in brokerage account, hey, what's the easiest access? And they allow you to have a line of credit, but they're pledging on that. So whatever that top line is of that line of credit, right? Have to be netted down at that point.
Awesome.
Because they could take out the money the next day after we do the loan up to that $1 million or whatever it is, what their line is.
Exactly. That makes perfect sense. And that seems to be all the questions that we have, Mr. Greider. Do we have any closing comments before we let everybody go?
Well, I'm hoping everybody kind of enjoyed this. I think I'm going to do a little bit more. I got more specific, and so next month we're going to look at property valuations, right? Maybe some appraisals, that kind of stuff to say, what does underwriting look like on that? What from a credit perspective, and maybe look at how can I get ahead of it? And I think we all kind of need to do this going forward. There's certain areas where if you read the news. Some areas like, I'll go in Texas are heading down in values or kind of things and comp comparables and what do the guys look for and how you can get ahead of that to give you some tools with that. So we're going to put on there how to review property valuations. But hey, thank you for doing business with us, right? You have my contact information. We would love, if you're not partnering with us, we'd love to partner with you. You can reach out to me directly or Albert or any of our highly trained account executives, and we'd love to help you close the next loan.
Absolutely. Mr. Fairman, any closing words?
I appreciate the opportunity to join. I think both of these programs, the Asset Express and the Asset Assist, are really valuable items to have on your product menu and aren't utilized enough. Take a thorough application. You'd be surprised what's available to help you get more loans closed.
Awesome. And we did get a couple of some more questions that came in, and it looks like Lee is just saying, can I get a copy of the slides? Yes, this will be made available to you afterwards. We have somebody else also asking for a copy of the slideshow. And then lastly, Lee is giving a shout out to Carrie Carlin, was able to get me marketing flyer for these a couple of weeks ago to get some interest. So good. We're happy to hear that.
Nice.
We're happy to hear it. Awesome.
Excellent.
With that, thank you everyone for attending. Please make sure to reach out to Mr. Greider or reach out to your account executive if you have some more questions, or if we need to set up a meeting with you so we can go ahead and we can talk about the different things that we have available. Thank you all for your time and have a wonderful rest of your day. Bye, everybody.